Welcome to Proven and Probable. I'm Maurice Jackson, and joining us for a conversation is John Floric of Emperor Metals, which is advancing Canada's next high-grade gold deposit. Mr. Floric, welcome to the show.
Thank you. Thanks for having me. Nice, good to see you again, Maurice.
Well, great to have you on the program to share the value proposition before us in Emperor Metals. Before we deep dive, Mr. Floric, please introduce us to Emperor Metals and the exciting opportunity your company presents to the market.
Okay, yeah, we're in a Tier 1 district. We're in Quebec. We're in the southern Abitibi. We're in a region that has produced over 90% of the gold ounces in all of Canada. It's called the southern Abitibi. And we have this deposit called the Duquesne West Gold deposit that we're introducing investors to. It's a high-grade underground gold potential. So we're quite excited about being in this region where over 200 million ounces of gold has already been produced, and there's a lot of activity still happening, especially with the advent of open pit mining in this region that has been ignored in the past.
Well, let's go on site. Mr. Floric, take us into Quebec and let's visit the Abitibi district, which is one of the top tier mining jurisdictions in the world, where Emperor Metals' flagship Duquesne West Gold project is located. Walk us through the district and share some of that rich mining history with us.
Yeah, so we're located, like I said, in the southern Abitibi. There's been over 200 million ounces produced in this district, and we're right on trend to multiple mines. We're along what they call the Porcupine-Dester Fault. Basically, that's the plumbing system that introduced gold into the district. It basically fertilized the greenstone belts. And so all these deposits, they make these linear trends. We straddle one of these major breaks, which I said is the plumbing system that introduced gold into the district. What's so exciting about this is that lots of infrastructure. There's highway, runs right through our property, power, and there's, like I said previously in other conversations, that we have, probably about 4 to 6 mines in close proximity, like half an hour to 45 minutes away from us. And that basically is huge because with a deposit like this, which is about 727,000 ounces of gold with an average grade of 5.42 grams per ton and an average thickness of 5.7 meters, it is possible that this could be a satellite deposit for supplemental feed for the existing infrastructure in the area. So that's huge because we wouldn't have to build a tailings dam. You wouldn't have to build a mill. And, with runaway CapEx costs these days, after the pandemic especially, you're looking at like saving, $500 million to $1 billion in initial, CapEx costs to get a mine like this up and running. When we have the existing infrastructure in the district, that's a huge cost savings. And what it really basically says is a deposit like this going into production, you potentially have a high rate of return, a quick payback period, and a pretty healthy NPV.
Yeah, you certainly do. Without that CapEx, your internal rate of return really increases there, because that capital expenditure, as you shared, those numbers can be quite mounting, if you will.
Yeah, and in a district like this, Maurice, too, is 1 gram per ton in a district like this is like almost like 3 grams per ton in other districts because of all the synergies that we have in this district. Even the workforce can go home at night. You don't even have to build a camp. A lot of these mines are building camps. It's fly in and fly out, and that increases costs. Here, everybody can go home at night. So that's a huge incentive to develop a project in this region as well.
Now that we are familiar with the region and the successes of your neighbors, Mr. Floric, please introduce us to the Duquesne West Gold Project, and let's find out why some prominent names in mining believe your team may be onto Canada's next high-grade gold deposit. And specifically, I want to know the genesis of the project. How did you stumble across the Duquesne West, and what makes this project so special?
Yeah, so it goes back to the beginning. We were looking for an advanced stage project because we knew in markets like this, we needed to find something that investors could have some significant upside in a bad market. So we wanted to find something that was substantial. We looked through numerous deposits. We came across this one. What we liked about it is its location. We said, holy cow, this is straddling the Porcupine-Dester Fault. It's very unique. People basically would love to have a project that straddles this plumbing system like I introduced you to previously. So we started looking at the numbers. We saw that there were substantial thicknesses. There was pretty good grades. So before we picked this up, we did a proper evaluation. We basically took the data set and we modeled it using artificial intelligence. I have some experience using artificial intelligence with the majors, and I said, well, let's use this new technology. So within about a month, we produced the first basically mineralized model. I took this mineralized model. So this was the first 3D model ever produced on this deposit. Prior to that, the 2011 43-101 was done with polygonal methodology. So it was just 2D cross sections and stuff. So this was actually the first ever 3D model. This deposit was discovered in 1940. There's been about 8 different companies that worked the property. And if you go through the assessment reports, there's really no clear visual of what was here. So by using AI, we could really illuminate, what the exploration potential was on this property quickly and make a decision. So I presented this to the board of director. We all saw the possibility to grow this deposit, and it wasn't one of these smaller deposits that just basically ended. So we saw a huge potential along strike, down dip, along plunge, and more recently with our 2023 drilling, we're now envisioning this large-scale open pit.
Well, you have us all intrigued. Tell us more as you walk us through the genetic and the exploration model on the benefits of using AI.
Yeah, AI, it's a really great tool. It really increases your productivity quite well and improves it. I call it the AI square. I coined this term, AI squared, it improves productivity, accelerates decision making, and it impacts the bottom line of the company quickly. In a day of day traders and stuff like that, you really want to move these companies along quickly. You want to show investors what you have. And if you think about what we've done as a company, we took this historical deposit that was overlooked, and I sat here for 12 plus years. In those 12 years prior to us picking this property up, gold went from $1,100 to $1,800. The deposit, no one was working it, but it grew by an additional $500 million of in-ground value. So that was pretty unique. We were moving into like an $1,800 gold price at the time when we picked it up. So that was really, really exciting about it.
Now, I see that your use of AI has also helped you identify new targets and a geological model. Can you walk us through some of that?
Yeah, so AI, like I said, we produced that mineralized model, but we also produced a geological model. And it really, in addition to the mineralized model, it really helped us understand the deposit a little bit better in regards to new target generation. And so when we developed this, if you think about what we've done in the last year, we developed a mineralized model, a geological model, and basically a conceptual model. We all did that all in 1 year. That would have taken years to do it conventionally using other programs. But by using AI, we're rapidly advancing this project to these decision points that we're making.
Speaking of the open pit concept, can you walk us through the concept?
Yeah, the open pit concept is easy. Historically, basically, previous explorers on this property, they never sampled the host rock. They only sampled these high-grade lenses because you have to think about the jurisdiction we're in. It basically, people classified it as an underground-only high-grade gold deposit jurisdiction. And so people did not think that you could develop open pit mines in this jurisdiction or in basically the Superior Province, such that companies like Barrick left in 2008. They went adventurism abroad. They went to Nevada, Chile. People were looking for desert regions and stuff like that. But it wasn't until Canadian Malartic and Detour Lake Gold, who basically, like Detour, I was chief geologist at Detour for a bit. This company, Detour Lake, basically had to go it alone and develop a huge open pit because the people thought that it wouldn't be economical. So they went alone. They raised $1 billion to build it, and they proved that we can, mine these large-scale open pits, such that Agnico Eagle now has this deposit, and it's one of their flagship deposits. It's producing over 800,000 ounces of gold per year, and gold price is going up, so it's huge. So we've shown that we can do it, and it really wasn't too difficult to think about the Archean deposits. We have a really beautiful analog to developing open pit models above these type of gold deposits, and you see that in Western Australia in the Yilgarn province. So we're doing something very, very similar here. And we got people coming back to the jurisdiction. right? So a lot of majors, they see Canada as a safe jurisdiction. Barrick just made an entry back into the Superior Province in 2023. So what was exciting when we sampled our host rock, we started hitting intervals of 25 meters of 1.69 grams per ton. People would not care about sampling that, and historically speaking, is they only wanted like things above 5 grams per ton. So those incremental ounces in the host rock are very important to develop an open pit. It reduces the strip-in ratio, and it really does add a significant amount of ounces to the profile of the mine. It's quite exciting.
Well, it certainly is. Let's test your proof of concept using this AI, as your team experienced a revelation on its 2023 drill program, which totaled almost 8,600 meters. What can you share with us?
Yeah, I shared a table with you, Maurice, and basically what the table shows is that basically in that table, the numbers highlighted in red were those high-grade lenses that historical workers would have sampled. Anything in green or black would have been the low-grade bulk tonnage that nobody cared to sample. So we're the first company to sample it. And you can see quite easily that there are quite a bit of incremental ounces. So initially, when we introduced this as a high-grade gold deposit to investors, from what we had as an existing resource of 727,000 ounces of gold, we thought we could easily double it from 1 kilometer to surface. And but now with the open pit, 1 kilometer surface, we're looking at maybe 2 or 3 million ounces we can build instead of 2 million ounces. So we're quite excited about that, but we also know that these deposits do go 3 times as deep as they are in the lateral extent. Some of the mines just, lateral to us are basically down 3 kilometers of mining. So, and we're only looking at in the long sections that I've displayed to the investor community, it's only from 1 kilometer to surface. So we know that if we can build 2 or 3 million ounces near surface, we could potentially double it at depth down to 3 kilometers. So that's sort of, the vision that Emperor has, is we're trying to build, potentially up to, 6 to 10 million ounce deposit here.
I was looking at your corporate deck, and your team specifically identified hole number 5. What can you share with us about adding ounces and stopes?
Yeah, so hole 5 was interesting because what we were promising investors was that we're going to step out and start growing the footprint and add ounces. We see the most value for our company is by keep adding these ounces. So we stepped out like 120 meters following these plunge lines like we talked about previously, that was illuminated by artificial intelligence for us, and we hit like 10.8 meters of 15.8 grams per ton. And what's important to know is that there's a series of figures I put on our website showing stope optimization models. What those stopes are, basically, you look at a block model, it's a resource, right? But it doesn't tell you what part of that resource is economic. So what we did was we did some stope optimization. Each one of these blocks that we characterize has to meet minimum criteria has to be basically wider than 2.5 meters, and it has to be greater than 3 grams per ton. And it has a 30 gram per ton cutoff grade. So if it doesn't meet those characteristics in the block model, it doesn't make it as a stope. So what we're showing here is that we're stepping out and we're hitting, intersects that should deem to be economic in the future once our plan is put into this onto this deposit. So yeah, it's quite exciting. We're growing. We promised everything, and we delivered. We promised that we would grow along these plunge lines. That's just an example of us adding ounces and expanding the footprint.
Well, there's nothing like exceeding expectations. Now, before we leave the project site, can you take us to the core shack and show us some of your assay results, please? And then let us know what we're looking at here.
Yeah, so this table that you have in front of you is basically some of those stopes that I talked about. You can see, and this is why I talked about earlier, the payback period. It'd be quick if it was just an underground mine only. But as we discussed, we now envision a big open pit above this high-grade underground gold mine. But in that table, you can see if you sunk a shaft right down the middle of it, you can hit the heart of this deposit. You're seeing 15 grams per ton over 15 meters, or 22 grams per ton over 5 meters. So what we're trying to show is that there's, since the average grade and thickness grade is 5.2 grams per ton. Average thickness is 5.7. But in the heart of this deposit, we have substantial thickness. This is what we really loved about the project, because you just think of, quick payback period, and then you have high rate of returns and good NPVs on a project like this, especially, I'll have to highlight this again, at the time, if this was considered like a satellite deposit for supplemental feed to existing infrastructure. Currently, a number of mills are basically under capacity, so they're looking for additional ore feed. So this is a very unique time in the development of something like this deposit, because mills are running out of ore feed, and here is a deposit that could potentially fill this critical need.
Oh, the timing couldn't be better. Leaving the project site, let's discuss some important topics germane to your projects, beginning with reversionary interests. Are there any on your project, sir? Meaning, are you 100% owned?
Yeah, so we have an option agreement. It's a 5-year option agreement. It's back-end loaded. We're in year 2 of this option agreement. Basically, it $10 million cash payment over 5 years, $15 million share payment, and actually a work commitment of $12 million. I'm not too worried about the $12 million work commitment, because we're going to do that anyways. So that's irrelevant to some extent. We're already, I think, at the end of this drill season, we'll be compliant all the way to the end of 2026. So that's going to be satisfied. So so that's where we sit, and we feel as though we're timing the market quite well. Gold price is going up. We feel as though this agreement that we have in front of us is actually going to be cheap. If you're going to want a deposit like this, they're going to be a lot more expensive. So we got in at the right time.
Well, let's put some of these numbers into perspective and highlight some of your team's business acumen. What is the cost per ounce on the option agreement?
Yeah, so when we optioned this agreement, we were basically optioned at the price of gold at the time, around $1,800, we had about $18 per ounce. But that was for 727,000 ounces of gold. Now, when you look at the historical calculation for the 43-101 report, it used a gold price of $960. So we know that we could have a lower cutoff grades. And so right off the bat, like in today's environment, we're probably sitting on well over 1 million ounces of gold if you have lower cutoff grades for a deposit like this. And we want to grow it. We want to grow to 2 or 3 million ounces in the near term. So we felt as though we could really reduce the cost per ounce down to $5 or so quite quickly. So that was the strategy. And right now, the strategy seems to be paying off.
Now, we're going to get into some numbers later in this discussion, but from a capital expenditure standpoint, which you referenced earlier, what do you foresee being your biggest expense, and when do you anticipate the expense?
Yeah, well, in all these projects, the biggest expense is drilling. And when you look at our open pit currently, it has 100,000 meters drilled into the open pit. And the analogs in the jurisdiction that we're in, a lot of them at 300 to 600,000 meters drilled into it. So we know that because we have this potential large-scale open pit, we're going to have to do a lot of drilling. That'll be the biggest expense. That's why I wasn't worried about the $12 million. And so we're on that journey. So the goal is, at the end of this drill season, we are basically going to update the mineral resource. And so probably Q4 or Q1 of next year, we're going to try to put out a new mineral resource estimation. And that'll give investors where reasonable, current conditions with gold price, get an idea of what we're sitting on, and introduce, the opportunities that is presented at a deposit like this.
Speaking of that opportunity, if anyone's familiar with the Lassonde curve, this will be the time to jump in and become a shareholder of Emperor Metals, because once the updated MRE compliant 43-101 MRE is publicly announced, you could certainly see an uptick in the share price. Now, speaking of that, are you fully permitted?
Yes, so we are permitted, and every year you have to reapply for permits in Quebec. So we have about 40 or 50 drill pads, and we applied for another 50 recently, and we're not having any issues in regards to the permitting process. We're not near any major lakes or anything in the area. It's actually in a pretty nice area. It's pretty remote. It's actually pretty remote for like a jurisdiction that's well developed. It's probably one of the more remote spots in the whole jurisdiction. So it's nice. It's a great place. So yeah, there's been no issue in our permanent process for drilling pads.
Now, is the ultimate goal for Emperor Metals, to build a mine or sell the project?
But right now, I just really want to add ounces. incremental ounces in the open pit, as well as expanding the footprint of the high-grade underground. So I think the best avenue for Emperor Metals is basically continue growing the deposit and building ounces. That's going to generate the most, market cap increase. So that's what we're doing right now. Because I've alluded to the fact that we have multiple mills and mines surrounding us, it's hard to envision that as we move forward that somebody doesn't try to acquire us because of our location. Location is everything. So we're in that jurisdiction, so we could see people probably, trying to express an interest. In fact, recently, we've had some strategics look at us. In fact, Rob McEwen, he's basically took a position out in this, financed us. He took he's 9.9% of the company right now. I think it's down to about 8. So anyways, we have Rob McEwen coming in as a strategic investor. He saw the growth potential, he saw the value, and he saw the success that we have. And so it's nice to see an aligned vision with him. And so he jumped aboard our company as well.
Well, that's a big feather in your cap to have Mr. McEwen there. He's one of the most prominent names in mining. If I'm not mistaken, is he also the 80th richest person in Canada? Or I got that number somewhere. Am I wrong on that?
No,
he's
I don't
up
think
there.
so.
Okay, he's up there.
Yeah, he's up there for sure. No doubt.
Well, we know he's selective and he has a criteria. So you had to check off all the boxes there for him to commit that much capital into Emperor Metals. Now, we've discussed the good. Let's address the bad. What can go wrong and what are your action plans to mitigate that wrong?
Yeah, so, it's a good question, Maurice. Right now, we're sitting on, we have 100,000 meters drilled into this. And because we have a 3D model, 40% of the drilling is within 30 meters of each other. So we almost have some indicated classifications on this deposit. Even though on the historical 43-101 report, the whole deposit is basically in the inferred category. So we know that we're further along than what the 43-101 report suggests. So what can go wrong? Say we started drilling, we're trying to expand the open pit potential. We already have an open pit that's 2 kilometers long, by 800 meters wide, down to 400 meters depth. We have that pit shell, right? We have these pit shells. We separated in phases, phase 1, phase 2, and the open pit shell goes down to 400 meters. And so our plan is to add those incremental ounces. Right now, all these shells are economic in today's terms. So we're quite excited about that. So if we basically, we're limited in our expansion to open pit or underground, we know that we can still grow this deposit quite substantially because of this open pit basically concept. So try to get 1 million or 2 ounces in the open pit and have 1 million underground. You're already looking at about 2 to 3 million ounces there from a kilometer surface. And like I said previously, we don't expect that we can't grow this further. We fully anticipate from our 2023 drilling campaign that, with the success that we're having, we feel as though we have a lot of these plunge lines to follow to add these additional ounces to this deposit.
Switching gears, let's discuss the people responsible for increasing shareholder value, where Emperor Metals has another competitive advantage. Who is John Floric, and what makes him qualified for the task at hand?
Yeah, okay, good question. So I'm a geologist. I'm CEO of this company. Basically, I have 30 plus years experience in the industry. Basically, the first 15 years was in exploration. Subsequent 15 years was in production. So I worked with companies like BHP, Placer Dome, Barrick, Teck. Most recently, I was at Detour Lake Gold, working for Detour Lake, and then Kirkland Lake, and then Agnico Eagle. So I have quite a bit of experience in exploration and production. I guess in the production side of things, I've worked at the historic Hemlo gold mines underground, huge 25 million ounce gold deposit plus. And most recently, I got my open pit experience in production at Detour Lake Gold, largest open pit gold mine in Canada. And Agnico Eagle is now the operator of that mine. So I have all this experience, and I'm trying to leverage my experience into developing my own deal with my directors and my board. So this is exciting for me.
Speaking of your directors and board, who are they?
Yeah, so we're a metals group company. And all the people on my board are affiliated with other metals group companies as well. We're just a bunch of group of professionals that work together, and we have positions in other companies as well, like John Williamson. He's a very successful individual in this space. He's taken about 20 different companies and made them very successful. Right now, some of the companies he's affiliated with would be Thesis Gold and Founders Metals, but he's had huge success, as well as Ian Harris. He's with, he was one of the geologists. He's an engineer, and basically he sold Corriente for $690 million. Him and his team, he was country manager for Corriente. And Sean Major, he's our CFO. He's another metals group company. He's a co-founder of the metals group company. We have Alex Horsley as well. I've been working with Alex for about 15 years. We work good together. He's one of the best IR people I know out there, and he works really hard on these deals. And so I have a really good team. And so I'm really excited to have this type of, horsepower behind me. These guys are all CEOs at one point in time. So it's really helpful for me.
Well, big shout out there to Mr. Alex Horsley. I've had opportunity to work with him here as well. Let's look at some numbers. Sir, please provide the capital structure for Emperor Metals.
Yeah, so we have 100 million shares out and fully diluted 140 million shares. We basically have $3.6 million in the bank. I would say that retail has about 47% interest, and basically high net worth investors, management, strategic people like Rob McEwen, they comprise the other 53%. So it's a pretty tight company, despite having 100 million shares out. And we have a lot of money in the bank right now. And we have people looking over our project as we speak because they're intrigued about, our 2023 drill program and what we're seeing. Also, can't forget the price of gold has gone up significantly.
Yeah, we're going to get to that in just a minute here. How many shares do you own, and were they purchased or were they granted via options?
Yeah, so prior to becoming CEO, I was just one of the largest shareholders, actually. I got most of my shares at 10 cents, so I wasn't even part of the founding round of this company. I acquired the shares. I was incentivized to find a good project. I'm a geologist, had all this experience with AI, using it to identify projects quickly. So, after I basically did the due diligence on this project and presented it to the board of directors, they asked if I would be CEO, and I thought I'd put my money where my mouth is. So I signed up as CEO. It probably would have been easier if I just stayed as an investor, but, I'm quite excited about this project. So, I jumped on board as a CEO. Subsequent to that, I acquired about 1.2 million in options. That's how I got my
Well, you got some stake in the game. By the way, we referenced Mr. McEwen. Can you share any other major shareholders with you?
Well, a lot of them are high net worth investors. And so we mostly have retail in the management and, some of these high net worth investors that don't necessarily want to be mentioned.
Understood.
And also our partner, where we option the property offer, they have a 3% interest in the property. So, yeah, it's, I guess Rob McEwen is a huge endorsement, and other people are looking at us very carefully as we speak right now.
Now, you reference how much cash you have. How much debt do you have?
Well, we don't have any debt.
Isn't that beautiful?
Yeah.
Isn't that beautiful? I love hearing that. All right. What is your burn rate?
Yeah, that's something I'm really proud of. I kept it, we're actually sitting right at about $68,000 a month. That's pretty low. And we're running a tight lean ship because it's a tough market out there right now. And we don't know where it's going. So the best thing to do is always run your company lean and don't be too extravagant, because you never know what's going to happen. Right now, the market's increasing, and the juniors, for some reason, haven't followed yet, but we expect that to happen very shortly. Gold price has gone up. Some of the major prices of their stock have gone up, or their market capitalization has gone up. Ours have remained pretty steady despite, a $500 increase in the price of gold. And that's kind of huge, because when you're looking at our deposit, and if you just ballpark it right now at 1 million ounces, if you go up by 500, since September, gold has went up by $500 an ounce. That's an additional $500 million of in-ground value that we obtained. If we didn't do any drilling, that would have just naturally occurred, a $5 billion increase of in-ground value.
That's, we said 500 million, correct?
Yeah, sorry. Yes, 500 million, $500 million, sorry.
No, that's completely fine, but it's all right. Those numbers are still extremely intriguing. You referenced market cap. How does Emperor Metals compare among your peers in the region?
Yeah, so we're sitting at about 15 million market cap right now, and I look at the analogs in the region that have very similar projects, open pit potential, underground. Some of them are even, they're actually trying to expand off of depleted resources. When basically there's no development on this property, all the resources are intact right now, but they're ranging between $50 to $200 million market cap, and we're at 15. So we see huge opportunity to grow our market capitalization. So we think that anybody getting in at this point in time is really going to, have some significant growth in the future.
In closing, multi-layered question here. What is the next unanswered question for Emperor Metals? When can we expect a response? And what determines success?
Well, I guess the unanswered question is, where do we sit right now? So that's why we're going to publish in Q4 or Q1 of next year an updated mineral resource estimate. So that'll give us an idea, an investor an idea of what we actually have. And we're going to be applying, current gold prices and current costs of production into this. Or we'll build a whole new model so investors can understand where we are at this time. Because the historical 43-101 report in today's terms is not compliant, and it was done at $960 gold. So we want investors to understand what we have here. So we're excited at the end of this drill season, after we add additional ounces in our campaign in 2024, we'll update the resources and show investors exactly what we have.
Speaking of that, what is the drill campaign for this year? How many meters are you looking at drilling?
Yeah, so right now we're fully funded for 8,000 meter drill program. And also we have a lot of, which we haven't touched on, we have this historical core. So in the open pit environment, 70% of the core was unassayed. And so now we're going through that. We published some of those results in our 2023 drilling campaign in historic core sampling. So that's huge, because that gives us 16,000 meters of core to basically sample for 2024 as we sit right now. And we would like to probably drill more. We're going to see how the markets, I don't want to dilute the company unnecessarily down at these levels. So it depends on how the market moves this year, whether we have a additional drill in past 16,000 meters, 8,000 meters of drill and 8,000 meters of historical core sampling.
What keeps you up at night that we don't know about?
Well, what keeps me up at night is I'm excited about this project, actually. So yeah, I think of the huge opportunity that we have in front of us, this high-grade gold. We haven't really talked about the rocks, and it's replacement style, so it's very robust. It's not these pinch and swell veins, so it's very easy mining. We have good competency in the rocks, so that's a huge bonus for us when it comes to slope stability in an open pit environment or underground failures. So the rock's nice. It has good geotechnical characteristics as well. So there's not much. The only thing that keeps me up at night is the excitement about this project.
Well, that's comforting to hear. Even though you're missing sleep, it's a good reason not to sleep. All right, sir. Last question, and that is, what did I forget to ask?
Well, we're listed on the Canadian Security Exchange under the symbol AUOZ, gold ounces. So look us up. And we're also listed on the OTC and the Frankfurt Exchange as well.
And what is the website, sir?
www.emperormetals.com.
Mr. Floric, it's been a pleasure speaking with you. Wishing you and Emperor Metals the absolute best, sir.
Okay. Thank you, Maurice. Talk to you later.
The information presented on Proven and Probable is provided for educational and informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or or fitness for any particular purpose. The information is not intended to be and does not constitute financial, investment, or trading advice, or any other advice. You should not make any financial, investment, or trading decision based on any of the information presented without first undertaking independent due diligence and consultation with a professional broker or competent financial advisor.